US is the world's largest economy with the highest nominal GDP worth $30 trillion as of 2025. So, who do you think controls the world's largest economy? Many of you may think that it is the regulators and the CEOs of these Fortune 500 companies that run the US economy. Therefore, many investors tend to focus only on US economic news and what these corporate CEOs have to say during their earnings release. Today, I will share with you a little known secret, and this secret could influence your decision making in investing. Want to know what this little secret is about? Hello everyone, welcome back to SDA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and to be the first to access these valuable resources, hit the subscribe button now. By subscribing, you're opening the door to the world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. So, who is BlackRock? BlackRock Incorporation is an American multinational investment company. Founded in 1988, initially as an enterprise risk management and fixed income institutional asset manager. BlackRock was founded in 1988 by Larry Fink and other co-partners to provide institutional clients with asset management services from a risk management perspective. Fink and his partners had worked together at First Boston, where Fink and his team were pioneers in the mortgage-backed securities market in the United States. Initially, Fink sought funding for initial operating capital from Peter Peterson of the Blackstone Group, who believed in Fink's vision of a firm devoted to risk management. In exchange for a 50% stake in the bond business, Blackstone initially gave Fink and his team a $5 million credit line. Within months, the business had turned profitable, and by 1989, the group's assets had quadrupled to $2.7 billion. Soon, Blackstone was renamed BlackRock and is currently one of the world's largest asset manager with US $11.5 trillion in assets under management. Due to its power and the sheer size and scope of its financial assets and activities, BlackRock has been called the world's largest shadow bank by The Economist. And what is a shadow bank? They are a collection of non-bank financial intermediaries that legally provide services similar to traditional commercial banks, but outside normal banking regulations. Examples of important components of the shadow banking system include securitization vehicles, asset-backed commercial paper, conduits, money market funds, markets for repurchase agreements, investment banks, and mortgage companies. Because BlackRock manages investments for small retail investors all the way to large financial institutions, governments amounting to trillions in AUM, they tend to take majority stakes in many top Fortune 500 companies. These stakes are usually substantial enough to induce influence in the boardroom and could in turn influence the stock markets. Some of the top 25 holdings of BlackRock, of whom they hold substantial stakes, would be companies like the well-known Magnificent Seven companies such as Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla. BlackRock also controls some of the world's biggest banks such as JP Morgan, Bank of America, Wells Fargo, and Citigroup. Basically, BlackRock controls brands that you as a consumer face in your day-to-day life, from banking, communications, internet, food, to personal care products like your shampoo and toothpaste. Such power is not to be underestimated. BlackRock's ownership in Apple already represents 7.28% of the iPhone maker's outstanding shares, while its stakes in Nvidia represents 7.56% ownership in the GPU maker. These holdings are examples of how BlackRock could own stakes large enough to influence any major boardroom decisions, and any major sell down by BlackRock in any of these companies can lead to catastrophic losses and in turn may affect global markets. Therefore, a good way to add on to your investment toolbox will be to understand where and what BlackRock invests in, such as the industries it is currently more heavily weighted in. An investor can then zoom into the companies and try to understand from BlackRock's perspective on why they move their funds into these companies. A good website I will usually use to track what these institutional funds are investing in will be whalewisdom.com. Whale Wisdom provides tools and data to help investors research and replicate the investment portfolios of large institutional investors, like hedge funds and money managers, often referred to as whales. By analyzing their publicly available SEC 13F filings, users can identify successful funds through the whale score, track their top holdings via the whale index, and use tools like backtesters to analyze past performance and replicate strategies. Let me explain the whale index and whale score tool in a little more detail. The whale index tracks the highest conviction stocks held by leading hedge fund managers. It is a long-only index that tracks the 100 most commonly held stocks disclosed on the quarterly 13F regulatory filings of consistently successful managers. The index is equal-weighted and rebalanced on a quarterly basis, 46 days after the end of each quarter, while the whale score tracks all managers who file 13F regulatory filings with the SEC and ranks a select number of managers using the proprietary whale score. To qualify for a whale score, a manager must have the following attributes: between 5 and 750 holdings in their 13F filing, have at least 3 consecutive years of quarterly 13F filings, hold no fewer than 5 stocks in its portfolio, manage more than 100 million in marketable securities, and hold at least 20% of its portfolio in its top 20 stocks. The top 40 managers who have maintained an average whale score over the past 5 years higher than the 5-year average whale score of the S&P 500 is used in the whale index. Based on the holdings disclosed on their SEC filings, Whale Wisdom identifies the 100 stocks most commonly held by the respective managers' 13F holdings. WhaleWisdom.com also offers paid premium packages that allow users to access data as far back as 2001 and also gives users access to over 200 funds. You can now equip yourself with this information from WhaleWisdom.com and use this information together with other analytical tools you may have already been using to build a conviction of a stock you were already looking at. Just to let my viewers know that I am not sponsored in any way by WhaleWisdom.com. For more information on how you can optimize your portfolio and would like to seek advice on your current investment portfolio, speak to us by replying to the WhatsApp link in the comment section, and our team can provide a personal touch and talk to you about your investment plans. I hope you've gained some new tips from this video. See you in my next video. Goodbye.